Good afternoon, everyone. Today is Wednesday, November the 30th, and this is the introduction to the ProActive Market Timing Pro product from Hamzei Analytics and how I use it specifically in my trading. So, what we are going to look at is this product itself, and I'm here to share it with you because I use it every single day, as I mentioned. Now, notice he says this is a package that is specifically tailored for retail investors and professional money managers. It is not for day traders. So you might say to yourself, well, my goodness, even he says it's not for day traders. Why would you use it? Well, I have found it particularly useful to really find out where the weight of the market is sitting. And I'm going to use the actual events of the last 3 weeks and also talk to you a little bit about what is in progress, but of course not discuss the targets because that is a part of the member information. So here's what we are looking at. We are looking at the last year, and we can see this. I have a bigger picture of it right here. Here is the timing, right? We beat the SPX. This particular product beats the buy and hold by 35.4%. You guys know in general that many money managers and portfolio managers underperform the buy and hold of the SPX. That's why they use it as a benchmark, right? So that they can see whether they're coming very close or far away from it. Most managers like that are actually chasing performance, and that is really why, well, one of the main reasons that they have a tendency to underperform. We are running to a year to the date of this pro market timing of the SPX and the buy and hold event. Currently, it's up by 35%. The market is at, what, about 8, something like that. And so it's doing significantly well, right? That's not even using the intraday timing formation. It doesn't mean that every single time it's going to be correct. But what it is telling you is that if you use the mechanic properly, you are going to have outsized returns to the market. And on top of that, if you have a good solid understanding of mechanical flow in the market, you're going to do even better. This is a product that really is tailored for someone who actually knows something about the market. It is not particularly meant for the novice, someone who cannot see price action as it naturally appears. He's not saying, hey, listen, just because this is my target, you go right out of the gate on Monday. If he says long, you buy. It is not that particular process at all. It is something that allows you to see where the weight of pressure is sitting in the market and how far it's going to get pushed or pulled in that space is going to be fairly critical for you. On top of that, independently, and I'm going to move this down here. Independently, he is ranked in the top 10 market timers from 1 year, and he is first and second from the last 3 to 6 months. All right, so this is an independent service that goes in and looks at all the work he does. It's registered, it's saved for absolute total transparency so you can see where he's coming from, and he is very well ranked and continues to get better all the time. And that's what the great thing about this product is. It really does get better. I've watched him make it better over time. And so we're going to look at it in terms of what you're supposed to do at the time that it comes out. And we're going to start backwards. So we're going to go from the earliest trigger event way down here, and then we're going to move up through the space and down through the level. So this is 1 and 2 and 3. So that's how we're going to go through the week. The first one we're going to look at is what he has coming out for us. This was 3 weeks ago, not counting this current week. The stop event was 2095. The first target, 2130. Secondary target, 2150. And so that is what we're going to look at from the first space. This will come out, you'll see it on Sunday nights when it opens up. And what I have here is a screenshot of the SPX and the ES. Now here's the thing. You can use SPY, just like he says, you can use SPX calls, puts, SPY calls, puts, spreads, whatever it is you like to use in the space. I'm going to compare the SPX to the ES because this is one of my primary trading vehicles through the course of the day. All right. So several weeks ago, and that date was 11/14, 11/11, 11/11. We stopped at 11/11 just before, no, that was just after, excuse me. Let's see where we are. Give me 2 seconds. Let me double check. I want to make sure that I am doing this without a brain hemorrhage because I, like you, have been working all day long. All right. On top of that, you can come into, yes, it's 11/11. And what do we see? Go to the archives. Forgive me for that. Right, 11/11. That's right. 2095, 2130, 2050. So this is the week of November the 4th through the 11th. He puts it out at the end of the week there. And so we're looking from the 4th forward. So it is the week that begins on that 4th space. Why am I having trouble here? Aha, here we go. And let's find the date here because that's where it's most important. This is where he's getting the data from, right? It's always here. And because this says 11/11, 7/4. Here we go. All right. So here we have the space where he says the stop event is the 2095 area as it's moving up through the space, right? Here's the motion that brought us through the election period, right? Election, big pop up, 2100 area, moved all the way up. Now we're at the 11 space, and he is looking at this past week when it comes up as the 11th. The reason I'm getting this crazy wrong is because when he has the archives set for where we are, it's actually 1 week prior, right? So we're looking at when it says the 25th, which is the last one we have here. Yes. Can we see an editing event in progress right here? Yes. This one down here, this one says 11/25, and that is that week that's just passed. And so this is the one that we are looking at. And so that is where we are headed. All right. So here's what I like to do. When I see his chart setting up here for these areas, when he's got a profit target and a secondary target and a stop event, my goal is always to try to enter near the stop. Now, here's what happened in that space, right? Because this was the week of the 4th, he had the stop way down here at the 2098 level, and then it really started to rally and moved right up into the first targets immediately. What I was looking for was the chance to get involved at this level. It did not come. And so what you have to take a look at in terms of the chart itself is something very, very simple. This is super key for me. I will look, and this is actually the 30. Oh, it's not the 30. I need the 10. I don't even know how this set came in here. All right. You want to look for the 10 simple moving average. Very key. If he comes in and says, hey, listen, this happened, and this starts moving, and it does not catch you, and you aren't able to get involved there, you can do two things. You can chase it into its first target, which was 2130, which is what it had, right? We're looking at that 4th area right there. Friday's the 4th, so Monday's the 7th. And so this is it right here on this 7th area, right? And so what the SPX does is just tell us, hey, listen, if you hold it here into the first target, you watch for the fade. If it holds it again, you can take the trade. This is a 4-hour chart. We're not looking at anything that's not going to run into these target spaces. So from an intraday perspective, if you come into the space and it started running, you look for his first target, watch the fade. Why is it a first target and why does it likely have a fade on it? It's a first target for a very specific reason, and it fades because it's a first target. Why? Because sellers are likely to be there. If you watch it fade and it comes back and it holds it, you know you can move into the next target. And when the chart has got a 10 that's moving steeply, or you've got a MACD that's moving steeply, you can use the standard MACD sitting in Thinkorswim. If it's moving steeply, your chart is going to have price action like that. Take a look at what happens on the intraday motion. All right, so here we are on the 4th. This is the weekend, right? Here comes the 7th, so that's that Monday. Here we are coming into the space, and here is the 7th, right? Here's the opening. This is the gap up that we see here. It's all the way up at 2103. All right. It's not at the 2130, but it's also the middle of the night. And so here we come into the day. And what does it do? It comes into a space that looks like it's got the same edge. Notice, if you guys don't chart the daily open, the weekly open, and the monthly open on your charts, you are missing something very important that lots of traders look at. And so you've got to establish that space. This was the weekly open for that. By the time we get into the morning, this is the 9 o'clock candlestick, it absolutely shotguns out of the gate. So I know here is a space I've got to watch for a fade. And if I don't see the fade, but it pulls into my 10, which is what we're looking at on the 4-hour, and it holds that area, I know it's a bounce zone into the next target. Every time it comes into a target, you need to take profit. Every time, and I'm speaking about intraday motion, every time it comes into a space that looks like legitimate resistance to the left, if you are trading intraday using this information, You need to take profit. That's what's happening. Now look at what this does here as it drifts down, election, middle of the night, fades right down into this base. What do we know about the overall weight of the market? Here's what he told us. He said, listen, the weight is long. That means if you see a monster fade, the first thing you're supposed to do is watch the fade, try to catch support. Now, a lot of us go, oh, that support, I must take it long there. Oh, that support, I must take it long there. That's not how you watch a price catch. Price catches when it fades and then holds a level, comes across again, and then makes a higher low. Those of us that try to pick bottoms very often step into spaces we have no business in because we do not understand the mechanic of what happens when a bottom forms. When a bottom forms, this is very, very specific. Here's what happens. See this? See this SMI? Look at this, moves from here to here. That's price. So price is moving in this direction, and momentum is moving in this direction. What does that tell you? It tells you, knowing that he has said early, hey, listen, we are in a bullish form. I know it looks ugly, but watch the bottom catch and you're going to find yourself along. And it started at about midnight when everything started shifting, of course, and then it moved right back into the space. Here's what you're supposed to do. You look at it. He says, hey, listen, 2095 is that stop. If we take a look at this space, we can see that there's price action that's soft around the area. Is support and resistance a true hard number? Those of us that study together, we know the answer to that is no. That is not a hard number. It is a range, and it's a range that gets tested. If you're away from your system, you need to put a hard stop on something. There you go. You've got it. But for those of us that watch price action, support is a range of motion. It is not an exact number. And so if you happened to trade some of those bounces, guess what a chart does when it fills a gap? It finds sellers. And when it finds sellers, it will fade back into deeper support. And if you look to the left, you're going to see where that deeper support is. For those of you that had the good fortune of holding on, a very nice trade, but what allows us to look at something like this that essentially looks like a train wreck, where we can say, hey, listen, I'm going to watch for that big time frame to catch, that 4-hour time frame to catch around this level. I'm not interested in picking up the absolute low. I'm interested in picking up the space where volume starts to pack in and the chart begins to move. And that's what you have to look at. So when you use this, it allows you to catch these areas that make you very uncertain, where you go, oh my gosh, is that falling off a cliff? You look for technical divergence across time frames with more than one technical indicator, and you see that this gives you the space. You still have an upward trending moving average, a series of averages. Listen, I know we've all been in a space where we go, oh my goodness, what in the world happened there? But here is a basic fact. If you have inflecting or upward sloping moving averages and you lose them for the first time, you will try to bounce and recover them. Not necessarily you, but traders. Traders will try to test regions that have broken down to determine whether they truly are broken or not. It's like looking behind at the door that's been closed and realizing that it's got to get tested. And so what does it test? First thing it does, it tests the open. It fills the gap. And then it comes back down. Do you know what this line is? It's the 12 monthly simple moving average. It's a composite, of course, because this is a composite chart. But that 12 monthly is very important, and you can use it on your stocks. You can use it any place that you want. But if you've got that space, you know it's going to be a region that is likely to be tested and retested until it affirms itself as frontline support. And so what this chart does in this case is expand well over the targets into the space. And so what we can do is put a trailing stop on this if it happens to get up and over the events that he is looking for. So let's take a look. Here's what happens. It comes into this space, comes in, it tests that initial target that was the end of the space, 2150. Here, where is that? Here's our 2150 area right around here. Comes in, tests it several times, breaks out, forms a new base, comes into the 10, gives you another set of run set up for you. So let's take a look at the second week. The second week was also long. When he says, hey, use half your bet size, he says, listen, something about the market doesn't look quite steady. So our new stop is 2155. Our profit target is going to be first profit target 2185, and the secondary profit target is 2210. So here we have this marker, and when he sends this out, the price of the SPX is going to be between the stop and the first profit target. All right, that's always going to be the case. So we're going to look at the following week. Here is our 7th, 8th, what is that? Tuesday, Wednesday, Thursday, Friday, Sunday. All right, here it is. He says the stop is going to be 2155. Of course, we can see this outperforming right here. It's above it. And the next targets, because my brain is a sieve, I've completely forgotten, 2185 and then 2210. So this was a pretty interesting space because as it comes in, right, here we are on the 11th, right? That is, what day is that? Friday. So here is our Monday event. He comes in and he says 2155 is the stop. But here we are coming in at 9 o'clock in the morning. It's 2153. Here's the flash. The best setups coming from using this rhythm, which is what it is. It's a measure of rhythm, is right down there near the stop. So for me, if it comes in and he says, listen, the SPX stops 2155, I'm going to look for that space where I look to the left and I see the 2150-ish area and I say to myself, you know what? If it comes in there, I know it looks nasty, I'm buying it. Why? He says the formation is essentially long, so I'm going to look for the deep pullbacks and give myself a move up. For the intraday motion, if you've expanded over the first and second targets and you're on a trailing stop, your job is to look to the left because he has not given us new targets that expand. What it's telling me is that these expansion targets are not likely to hold. So you're going to be looking for the peaks that you can see to the left and the flattening of momentum that gives you more divergence. Take a look at this. I'm going to use this very same motion. Here it is up here. First and second targets already accomplished. What do we have? Technical divergence. What do you mean? Price action moving up, SMI action flat to down. Now notice, what is this doing? This is still moving up. It hasn't rotated over yet. If you don't use the awesome oscillator, which is present both in Motive Wave and Thinkorswim and a variety of other places, it's really quite a beautiful technical indicator, and it's very, very simple. When it's red, it's fading into support, and when it's green, it's bouncing into resistance. And when it first begins to turn, if you see this divergence here, and it first begins to turn, you can expect, if you see the MACD moving up, that it's going to retest your areas long. So do not chase the short. You're going to look for the rejection of the region to take the short into what? Support levels. And that support level is going to be a target. It's going to be one of the targets that he had. So when you look at that and you go, wow, it's expanding over his targets, what he's saying is, hey, listen, that expansion's nice, but it's not expected. And if it's not expected, it's probably going to fade. And that's exactly what we get for 2 days. Any bounces end up giving us the fade into the support. So the next week, he's got the support action. So here's what you want to do. If you get up at 4 in the morning and you see his Sunday night post and it says, which it comes out in the evening, if you see his Sunday night post and it says long and you're up here at 2174, which is exactly what I saw, I went, oh, that is the pits. I know what to do though. All I do is wait for it to come into support. Early morning event, it's a buy zone. And so that ends up being the buy zone that takes us through the events. Here's what we see. See all this motion here? All this MACD motion downward? Listen, so many of us have no idea how to read technical indicators. All this says is, I'm moving into support. Guess where it is? It's the moving average. It is that space, right? He's saying, hey, listen, first target is actually going to be at the 2185 area. That is, where is that? Right here. Totally gets it. Right there on the space, totally sitting in the region as that target space. And so here's the thing. As it moves into the target space, you are to take profit. If you look to the left and sellers have been sitting there and you go, oh, but he says 2185. If you're an intraday trader, when you look to the left, you are to take profit if you see sellers there. But it's breaking out. Just because it breaks out doesn't mean it's not going to fade. Now, on the swing event, all you're looking for is for it to hold support action. But if you are looking at moving through the cycle and it comes right close to the target space, all of us are really, we try to squeeze every penny out of our move, and a lot of time it gets us into trouble. Be the mouse that just grabs the biggest piece of cheese, not all of the cheese. Just go in, get the center, and move along, and don't expose yourself to massive risk. So he has it here, comes into the space, holds the level, and then the following edge of the day, Friday, in the early morning, it gets to that 2185. Now, here's what we do. It gets here, we take profit, we come in. Is he still long? Yes. Has he put out any notes? No. That means it's still holding the trend, holding the space. I mean, look, we can draw a trend line and say, wow, that is holding my formation. It hasn't dropped down. It's holding the weekly open. That's a space where you go, well, wait a second. That's where old resistance is becoming new support. I can pick it up there because I know I'm going to the eventual target, right? That target space is very, very important to keep your eyeballs on. When you come into the trading day, after you've hit that first target, you've got to realize that those first targets, just like we said over here, the first target events are spaces that are primarily sell zones, unless the pressure of motion is holding the chart. So your goal as a trader is to see how deeply the chart runs into congestion. Hey, where's support this time? It's 2175. Well, that's well above where it was a couple days ago. So I'm going to hold it there. I'm going to give it a go. I'm going to see if it can get back into my 2185. And that's essentially what we do in this space. As long as he says, hang on, that's exactly what we are supposed to do in terms of paying attention to motion. Now, if you are a swing trader and you're looking at this formation, your goal is never to execute until you've seen a nice pullback into the bounce zone. Again, he's not telling us to just run right out there because Sunday night comes out and he goes, here's where we are. Here's what we're thinking. He's saying, here's the strategy event. Think wisely and position yourself accordingly. So this is not a mindless event. This is a space for a professional trader to look at something and go, wait a second. If I've got weight, I need to watch for the fade to minimize my risk event and expose myself to upside action. All right. So there we are at the next space. We have the contract roll held in the region. And then here is the last one. 2190 was the stop. 2195 first target, only 5 points away, but he's got a much bigger target of 2225 in the space. Essentially, we're sitting in a very bullish, naturally bullish environment, running a little bit hot because of what people perceive as some kind of election rally, as it were, for the markets. And so that space he has is this 2190 as a stop, 2195. Let's find it on the SPX. Here we are. What date is that? Yes. 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 So here we are. Begins the month. Move into the new space right out of the gate. This thing is moving up. Right up into the space for us. Here we are. 5 a.m., it starts running off that region. If we come in the early morning, we're already up over the space that he's got as support, 2190. Now we're going to look at it on the ES. We can see the real support level is down here at this 2187, right? Higher support building pre-market at this 2191. Those of us in the trading room, I hope you remember me talking about this. I said, listen, you see a big wick here. Look at the slope of trend. It is telling you that if you pull back heavy, you're going to find buyers. And so this event here pulls us right into the space. Let's say you're sitting and saying to yourself, gosh, I certainly would like to get involved in that space. I know definitively that's where my long action is going to be as I begin the week from a continuation space. If you get up super early and you're able to participate in this, great. Otherwise, you're not going to think to yourself, wow, that's moved up so much. I'm too far away. I better think about shorting. Listen, way too many of us have that really backward mental space that we think about absolutely wrong in this in the trading space. If something expands, that's a good thing. And if we are seeing the MACD, why do I have both of these on here? This is damp. It's flat, but the measure is 80. And so it tells you that buyers are afoot. It doesn't tell you anything about slowing down. It doesn't tell you anything about being oversold. Nothing at all. It tells you simply, hey, listen, there is a lot of weight that is pushing the market up. So if you see a little fade and he says it's 2190 and you come into that space, you get yourself involved, where are you going to? You're going into frontline resistance. Now, here's the thing. As you look into the the ES, we are up in a region we've never seen in this space, right? It's not here. So how do we look at that in terms of saying where's support and resistance? Of course, I have the levels sitting there for you in the room, but if you're not in the room, the very simple thing to do is measure your last wave with a Fibonacci. And you look for the expansion, right? So you want a good wave. You don't want a wretched wave or something that's too small. It's not going to give you the proper expansion. So you measure the last wave, and you see here the 150 level is 2201.77. You might say, Anne-Marie, how'd you know which wave to choose? I'm looking for the biggest wave over the shortest time period. Essentially, that's going to do it for me. And if I'm trying to measure an ABCD pattern, which I can see here is 150 to 150, it's telling me what it is that I am looking for. If this fades into a 50% rotation, my Fibonacci tells me that I am likely to have symmetrical motion that's going to send me to 150. So what did we have as target levels? We had that 2101. As a trader, intraday, you have to look at where the chart begins to show that it's got selling pressure. That is something very, very important. You just don't hold it and go, well, he said it was 2210, so I'm just going to hang on to it, unless you're swing trading, and then that's exactly what you do. You just leave it alone. You let it get into the target, and then you take it when it gets to the target, right? Simple as that. Simple as that. If you're intraday trading, you have to look at where the weight starts to shift. Guess what? It starts shifting in the middle of the night. So what do you do as a trader? Well, it comes into the end of the day. You either say, hey, listen, I want my trade to close when the chart hits 2201, or I want it to close when it comes down below wherever your stop is, right? You put a bracketed order. One cancels the other trade, OCO. You get yourself in the space. When you come into the morning and you see the fade, guess what? Just because I've come into this space doesn't mean my trend has changed. And what do we know about a fade that hits a steep upward moving average that's got a reading of 87 on the SMI and a positive reading on the MACD and the oscillators? It tells you, hey, listen, I got to bounce. Where am I going to bounce to? I'm going to bounce into the overnight high, and then I'm going to take my profit. I'm going to take my profit there. If you say to yourself, because you're looking at a tight cycle, you go, oh, I can trade the short. Otherwise, guess what? You come in at 9 o'clock in the morning, you see it fading again. Has this changed? No, it has not. This is still steady. Is this moving down? Absolutely. What did I say this was? It just means it's coming into support, and that's been firmly established. Where he told us that support level was supposed to be, right there in that space, we can take it long again. Where do we take it to? Prior resistance. Prior resistance. The great thing about having a separate account to trade these on the swing is that these overnight lows that pop into these higher levels, we get to participate in. We can trade around the position. But let's say we don't come in. All of a sudden, we're sitting above this area that was commanded by sellers. All of a sudden, we're breaching the region. What does that tell us? A lot of us say, well, I'm going short again. That's fine and dandy, but that's wrong simply because you're too close to the moving average. If you want to pick one thing, you can't short when you're this close to a moving average, folks, unless you're looking for 3 ticks. If you're doing that, knock yourself out, you're going to get it. Otherwise, motion above candlesticks that have repeatedly shown up as resistance mean the chart is in a breakout formation. It's exactly the reason we could see oil moving up. I said, hey, listen, it's above 49.20. That's a breakout zone. Is it going to fade at the first pass? Maybe, but if it gets back above 49.20, it's a breakout zone. It's the same mechanic regardless of instrument, and it works exactly that same way. What does it do? It gives us another shot the next day at the place that was old support, gave us the long. Guess where it hits? His target. Hits that first target in the space that we are looking at from that area. Now, he's got another space higher above for this week's formation, but here's the difference. This week, when we came into this week and he said, listen, we have a long element here, but watch your size. To me, when I come into the week and I see a flattening of my moving averages and I see a drift that is significant in momentum, it tells me I'm either range bound or changing weight. And so for me, I will lighten the load of whatever it is that's sitting, whatever size I have remaining, that's sitting inside of my swing portfolio. And what I am constantly looking for are the pullbacks. I talked about it yesterday in the trading room. I said, listen, I even wrote it on the blog. It's wide open. I said, hey, listen, if we come in to this 2196, 2197, it's a screaming buy. Who wants to buy that when we see it falling off a cliff? Nobody does, really, unless you look to the left and you go, wait a second, I'm in a big cycle. Here's my 4-hour. It's holding my 50. Support has not essentially broken. And I know every time I've come into this level around these areas, I've found buyers. And that's exactly what happened. And where do we get to go? Right up into resistance. What are we doing now? We're filling a gap. We're filling a gap event that's sitting right here in the space. And that's exactly what is going on for this week. So the bottom line is that this proactive market timing tool is highly effective at helping you manage the points that are most difficult for you. Oh my gosh, do I really want to buy here? Oh my goodness, what do I need to look for here? Now, he's got a very important level around 2200 in the SPX that we need to watch. But remember, 2200 is not an exact number. It's a range. And the reason it's a range is evident right here. There's buying pressure all the way down to 2196. 2190, really, there's buying pressure all the way down to 2194, right? And so here's what's happening. The flattening out of the SPX. We're losing the 10 moving average, which drifting over right here. What it tells us is that somewhere here, what's happened every single time the SPX has come into this region on a 4-hour chart? The last 1, 2, 3, 4, 5 times that it's come in here, people have bought it. Buying, 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 buying. So what do we expect here? Buying. Now, we don't expect a brand new high right here, but that doesn't mean it won't happen, because all this is telling us is, hey, I'm drifting into support. So the support structures say we should find buyers here. So what we're looking for intraday is stabilizing of this level. And because this is a steep 50, it is telling us that if we lose it and we drift down and hit some of these lower levels, we will come back and attempt a retest. We might not get it every time if the momentum is high, but it should give us some kind of lower high somewhere around the congestion zone. So that's what we are looking for, essentially for the chart to stabilize so that we can see where the next intraday long is. Or if you're looking at the space, to take that intraday short on a tight time frame with a flat moving average, folks. I say this all the time, people just don't believe it. When you've got a flat moving average, the math, the reason that it's flat is because there's just as much action above as below. Otherwise, it's going to change. And so when you've got a flat action event, even if it's breaking away, it's going to come back and either give you higher lows or it'll give you a fade into a deeper low if it's expanding. This is one of the ugliest formations we can have in the SPX or the ES because it's building a megaphone, right? And if we join these, wow, that'd be ugly. If we join these right here, we could see what this could do. It could really come down into this space, but there's a bounce. There's a bounce setting up in here, and it's in the neutral zone. It's not like it's a negative trending territory at all. Okay, so that's it. That's how we use it. That's how I like using it anyway. And let's see. Fari, do you have a mic open? Yeah.
No, now I do.
There
I had
you
it
do. All right,
quiet.
great. So
Didn't want
thank
to give
you
me.
for sitting there listening to me blither on about how much I love this product. But thank you for being here. I wanted to open it up to questions for everyone. And certainly, I have a couple of questions. But first,
Okay.
does anyone have, oops, here's the one I want. Does anyone have any specific questions? Other than that, while we're waiting for them, I want to, new ones.
You went
Yeah,
to .net, which is our blog. That's
right.
doesn't have a login. Yeah.
Yeah. So what I wanted to do is actually talk to the folks about anything that you feel maybe that I
Sure.
missed, of course, and then also how they might look at this at the end of the day to tell them what might be going on. So if you would like
Okay.
to use your screen or if you would just like to use this one, it's perfectly fine with me, but go
Okay.
right ahead.
Okay. First of all, thank you for having me. And if I talk a little bit too fast, please slow me down. Been around futures too long. That's a problem. But first of all, there's only one comment I want to make, is that uh, if you bring the targets up that you were showing
Oh, yeah,
up,
yeah, yeah.
I just want to remind everybody the targets are SPX. Okay,
Yes.
they are not ES. They're SPX, and here's the reason. It's a cost of carry. We want to make sure that's out of the way. Okay, so that you can go back and forth and charts are clean rather than worrying about continuous contract and methodology. Because people come in with different analysis and so forth. So everything we post on SPX, we do give you a chart on Monday morning called companion chart. That gives you hourly levels. Okay, I'm sorry, hourly bars on a weekly support and resistance for both SPX and SPY, because majority of our clients, which is about a little bit over 300, are using that center, the sweet spot, which is SPY actually. They're using SPY as a call spread or put spread, depending on the bias. I know Wells Fargo, they're using it for a bunch of their clients as cash, because I don't think some of their accounts cannot handle or not supposed to handle options. Now, few people are using it for futures. Those are the scalpers, the little bit sharper cookies, where at the edge they're trying to push that extra basis points or so here and there. But majority is really SPY puts and calls. So to make it, but since our ranking at Timer Digest, and this is father and son, they've been doing it for 40 years. You know how that goes. They sit in the Greenwich, huge estate. The golden rule is the guy with the gold makes the rules, right? That's always has been that way, right? from about 6,000 years ago to now, the guy with the gold makes the rules. And so they make the rules. They work off of SPX last known price. Okay, SPX last known price. Why? You cannot be confused. You cannot argue. ES can change all the time. I can send you an email. By the time the email comes from me to you, ES could move a couple of ticks. Not with SPX. There's a close and there's one, and it's not just Dow. It's just known value. Each day we have one SPX close only. And is why it's not Dow? Because SPX is 80% of U.S. equities. It's a better way of benchmarking the U.S. market. And so that's what they use. So everything we do is based on SPX because that's what they want from us. And I'm only one of the timers there. There are about 150. So can't go in there. No matter how good I am or how bad I am, they won't listen to me. I can't go in there and tell them to change the rules. I gotta comply. So that's where you see SPX. But it's very easy to convert to ES. All you have to worry about is the premium, the cost of carry. And these days it's not really the interest component. It's really the dividend component is what matters because the interest rates are so low. But as you get near expiration, like right now, this week and next week, that delta will go to zero at the limit, right? So it's just roughly you could get it there. Now, one more thing is to also when we come in like last week, when we had a position that came in and we had a lower limit which you stop with an up bias, and you have a first target and a second target. This was last week. Yeah, last week we happened to get there very, very fast. Actually, in first 2 days we hit it, and we almost hit the bottom. Okay, on a cash. Remember, you're supposed to trigger the ES trade if you're trading ES off where the cash is. Okay, so you gotta be watching. You can have it on your coach, put an alert on, what have you. We almost got hit, but we didn't turn around. So precision was very good, and you see all of a sudden Twitter world goes crazy, and they say, "Who picked this trade?" And I usually tell them it's Tico, my dog. I said, because the tuna hashtag tuna power, he picked it. He almost hit it and bounced up, and then runs up to the first target instantly. By the second day of the week, we had hit those areas. We've taken what I call the range, okay, the most probable range, and that's about a little bit over 1 sigma, close to 2 sigma level. Okay, if we go above that, which is the secondary, that you're getting close to 3 sigma of the travel. That's 99.97. So we're exhausted. We got to get out. Chances are, if you sit around that or after that, you're going to give back. The whole idea is to manage your fear and greed. Okay, so that reasonable price to get in, reasonable price to be ready to peel off. That's what we also added a comment saying: take 2/3, take 3/4 out, move your stop, and if you want to have a runner, keep the runner for secondary. But then we came back because we hit that week. That was very unusual, and I've not done that in a while because we set. This thing has been running about 3 years plus. Not necessarily this format. This is a lot more, far more. I'm going to try to bring my screen in if you don't mind.
Sure. Take over.
How do I? Excuse me. This is what do you call it? This is go to webinar. I forgot. There we go. All right, there we go. And so I'm going to come back in here. Here's you should be able to see what I'm doing there. Audience view. Let's
Beautiful.
See. Yes, it's true.
Yeah.
Here's our archive because it's online. There we go. Every time you log in, you come in, you're going to land on the most current issue because it's an online newspaper. Everything we do has to be recorded and kept. And so this is issue 169, and the issues prior to that, you click on members again, go to the archive, and you see this is the 15th, this is the 16th. This issue on the 16th of last year, we went to this format. Prior to that was just emails and some charts on Twitter. But now we've integrated everything because everything we do, we have to save it. Everything is loaded and comes out of, you'll see it for that issue, they put the pictures and so forth. And these are the thumbnails. You can touch it and blow up. This is a Google technology, black box. So it brings up, I have a great IT team, they support all of that. Now I just want to go over here because this is an issue. By the way, I just changed this language a little bit, Anne-Marie. to
Okay.
people realize. This target was met very fast. Okay,
Yes.
so basically it's out of the way. So because this is the target, original target.
Mm-hmm.
70, 95, 22, 10. Look at it. This was Sunday night.
Right.
This was Monday morning. This came so fast, we start tightening up and moving the target a little bit too aggressive. I realize that.
Mm-hmm.
But I said, this is already met. Raise your target for the balance and shoot for 22.25. We didn't get there. Actually, what we did, we got to 21.10.
Mm-hmm.
Okay, but you don't know. Listen, Monday morning we have a lot of quarterbacks. Okay,
Yeah.
tell me what they would do on Friday, Saturday, and Sunday.
Exactly.
Forget Monday mornings. Yeah, exactly.
Exactly.
So, and so also, but it is a feedback system. It teaches you, for me, for example, to be less aggressive.
Mm-hmm.
Next time, but even runs this fast. Why? Because something like this. Here's today's data. We're way up there. This is a weekly channel. Weekly chart. We're at 2 sigma events right up there.
Mm-hmm.
As you go up these sigma levels, chances are less and less and less.
Mm-hmm.
And also, we've had this event. If you go
What
back
is that?
this is a high and lows, 52
Okay.
weeks.
Oh, okay. Got it.
Oh, yeah. Basically, I work on what's called preponderance of evidence. Okay.
Right.
I look at a lot of charts.
That's why I love this system, because
it's a lot of geopolitics. It's a lot of charts. It's a lot about quantitative work. I do a analog chart, which it basically was. Let me bring it up here quickly. There you go. This is the analog chart. A lot of quant work done, comparative different years, and this one is basically past its shelf life. It's projecting to go down. This was a year that we had contested election, and here's election night. When we did this, life is over. Now I'm gearing up for next year. And at the beginning of the year, you have probably a window of a month to two. You got to work very hard to find the analog. Obviously, you can't find the analog too late. It's too late already gone.
Right.
You can't find it too early. There's not enough to match.
Mm-hmm.
So you got to come up with methodology, and I do that. But this event, the new highs, new lows, when these formations come, you see the momentum waning.
Mm-hmm.
We're running out of fuel. We're running out of energy until a secondary event shows up. What is that? I don't know. I don't know to make the news. As I always try to explain to CNBC folks, I don't write the news. You guys write the news. I'll tell you when your news is coming. Why? Because of what's in the market. Market discounts the news. Somebody knows something. Either it's option market, futures market. I can read the tea leaves and tell you a news is coming. Not what the news is, but what type of a news is. Like, is it good news or bad news or neutral? Mm-hmm. And I know when it's going to be roughly. It's up to you guys to write it, because I'm not into that business. Plus, I have no inside information. Everything I do, by definition, has to be public information. Reason is because of clients we have. Some of the hedge funds, they would go crazy on me if I had inside information. So we make sure everything we do is public information. Price, volume, that kind of stuff. But I look at it as esoteric stuff. For example, SQ. Very few people even understand what that is. That's a tail risk. Few people look at it. But this gives you the signals. This was right into when we hit the 4 sigma event on SQ. Lloyd Bankfine called FBI to call me and said, okay, release her. We're done. That was it. That was a takeoff. That Sunday. Okay. So this is the type of stuff you start looking at. Here is Brexit. Remember, Anne-Marie, we went flat here?
Yes.
Okay. We had a target of 21.10, I think it was. Is it 21.10? Yes, we went to 21.30. You see that? 21.30 right there, right, on Thursday. 3 points above our target. We went flat home. And people ask me, why don't you take that? I said, it's a binary.
Yep.
It's a binary event. There's no analog for it. I just showed you a good analog. We've done analog. The analog prior to that. Let's go to here. Last year analog. Hold on, let me go here. This is what people were going crazy in our chat room. During daytime, there we go. Look at this analog. Hello. Look at the bottoms. Boom, 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 boom. And then this is what the drop was. Look at these moves. Boom, 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 boom. When you direct trading like that, it's not it's not the golden rule. This is the platinum rule. You're making platinum for their gold. People were scary actually saying, "Hey, how is this saying that?" I said, "I don't know." This was, by the way, this was time shifted. We picked up 21.11. We started looking at it early on. This was where we got a little bit nervous. And then once this started, I knew I was on the right track. I knew I was on the right track. Because look at the shift was. As a matter of fact, we went short on the 11th, no, August 11th. This is, yeah, but remember, this is, I'm sorry, this is time shifted. I'm sorry.
Yes.
Yeah, August 11th of this line, okay, which would be about somewhere in here. We went short here. And we went about 10 days, and everybody told me, go back where you came from. This is not working. I said, well, Tico says have more tea. Maybe you ought to have more tea. You know, get rid of that espresso you're having. Hold on. And then this starts. We get down here, and they said, where do I sign up? I said, we're full. Thank you. Get a ticket for the next train. You know, this one is full. You know, when they get out of control, you just, you know they don't really pay attention. They think this is a game. This is not a game. This is a lot of work. And a lot of people are depending on it. You have to be cautious of what you call it. Because, you know, I've also seen people who became very, very, let's see, very cowboy at it. And I just heard from a lady who wrote to me that the husband had just gone crazy because of some of my calls. He changed his bet size. And now they're talking divorce.
I
don't want to get into a drama. I don't want to get into drama.
No, I understand that, but that's a problem that a lot of traders have. They size up and lever when they have no business doing it.
Well, they don't understand. Here's the way I would explain that. This, for example, this is what a lot of money managers look at, the trender. How far the rubber band is, okay? How far you are from this line, okay? And up and down, what the norms are also. We go back, we open these up to 5 years what the norms were, to establish at least warning areas, you know, rubber band or compressed coil. The problem people have is that they don't understand the separation between luck and a skill.
Yep.
Okay. They duplicate something, okay, and they think they did it, or they think I'm smart. No. Sometimes my luck too. Who knows? We went short. When did we short on? Okay, let's go to Christmas Eve last year. I think you and I were talking about it too. A couple of days later, if I remember right. Again, you know, in my advanced age, I don't know what I remember, but hold on. 22nd. No, Christmas Eve would be after that. So let's go to. Remember, these are Fridays. The archives are queued up on the Friday close. So let's go here. Should be there. Okay. And this is 27th. There you go. Right there. Notice change of bias. At 1917, and this is the exact time the email goes out, and this is the text of the email. If you go to Jim Schmidt at Time and Digest, he has a copy of this email at that time. And sometimes I even copy it out to you guys because I have to keep up. I copy it immediately with a quick email to you, and then become part of the newsletter, and in the chronological order. But I said we're going to go short here. As a short term, we should be 1 week to 10 calendar days. Okay. Well, what happened that time? Nothing. Let's go to the next issue and take a look, because we want to look at the next chart. You don't want to go too far out. You want to go what you're seeing there. There's the next issue. And and I notice when things start moving, we do multiple updates.
Right.
We have to carry you. We have to talk to you. We have to be in touch with you. There you go. There's the time of digest. If you look at it, we went short right there. Nothing happened. One day went against us, and then just slightly starting. Okay. And then, oops. And you all remember, it came up with the. Let's go forward a little bit further out now. No, these are each one issue. Let's go 22nd, so we see the effect a little bit. Mamma mia! Welcome to America. This was the fastest drop ever for January.
Yep.
Okay, and I mean, we had some futures on. We added on the option room. We added some put spreads. I had a new guy just joined us, big time guy from SIBO, but a market maker, like a Nigerian type, except much bigger than him. He was speechless because these guys trade 3-4 ticks forward. That's all their inventory is. Okay, but large size, 3 or 4 ticks, and that's all they gotta do. We went a week and a half.
Yeah.
If you look at the levels, so that's 200 points.
Yep.
We dropped 2,000 Dow. with 200 points in S&P, and we had the put spread on. I mean, he was absolutely speechless. Like, do you really need me here? Look what you call you made. I said, listen, Mark, this is just one trade. Relax. And then, of course, we had to repeat it in February. Why? That was a W. I was looking for a bottom. So a lot of it is technical analysis, heavy duty. I have to admit that. You know, I did through I had my boot camp in Southern California, which is a hotbed of technical analysis. We use a lot of different charts, a lot of volatility measurements we look at, so on and so forth. Mathematically, I've done a lot of my academic work in volatility. I had a VXN out. Okay, this is a Nasdaq. 1 year about or 18 months before SIBO did. Actually, Dr. Whaley would call me and look at his numbers versus mine, the guy who did the original VIX, when he was doing the NASDAQ one. So my area is volatility. I listen to volatility. That's what I like to think of myself. As these vibrations change, that's what volatility is. I'm listening to this volatility and then picking the trade I got to go to. So.
Well, the great thing is that you get to do all of that intensive work and we get to benefit from it. So always.
So I must be the blonde one. Okay, I must be the blonde one. Okay, got it. Okay. Thank you. All right. Okay. No. There's a question there from Shelby.
Okay, I think I might have answered that one. He said, okay, how do you translate SPX to the ES, or the price is the same? I said, no. If you would like, I said the forms and shapes are the same, but if you would like to add to that commentary in terms of what you...
Yeah, I don't want to open this. No, hold on. All I wanted to show was actually this. Here's your SPX, okay? And forget about it. That's intraday stuff. Hold on. Let me open this one. Actually, you could come here. Here's the Globex, okay? So you could see, why is this thing doing this to me? Hold on. Here's your SPX close, 91.81 close. That's SPX close. And of course, we're trading a little bit below that. What you want to do is look at where. I'll let this thing finish. It won't let us. Otherwise, I'll. Okay, you come back here. This is the dot D. And I'm going to close this. 1 second, please.
Yeah, no problem.
Yeah, there we go. Here we go. Here's the dot D. We close at 99.75. Okay, at least at 4:15 Eastern time. And then let me pull this way. And then if you go to Globex now, I'm sorry, go to this table, you see that corresponds to 98. So we have a delta of about a 1 right now, so somewhere in that area right now because of expiration. Now, next Thursday, the roll starts. We still trade ourselves, we still trade ESZ on that day. On Friday, we'll go to ESH17, mainly because of volume. We look for where volume crossover comes here. Otherwise, you're going to be chasing. And I don't like to trade on a rollover. I don't like to trade like the afternoon of it. Yeah.
Okay.
It's just learn from the floor. I mean, I never traded on the floor, but I have a lot of friends there. I spend a lot of time there learning from them. I'm an off the floor trader, upstairs trader. But I noticed that they would like, hey, let's go for a drink, or they go to the gym, or we just took that days off, that afternoons off. So I just have a habit of not trading it then. And then next day you're fine. You're going to be trading March.
Okay. All right. Well, thank you so much for taking the time and visiting with us, learning a lot about this. I do love this product. I find it to be an incredible tool, and I really feel fortunate to get to talk about it. Certainly, you're open to answering any questions. Folks, if you're here and you want to reach out to Fari, you can find him on Twitter, and you can find him, I'm sure the contact on on his website will allow you to contact him via email or anything like that, and he'll answer those questions. And Outside of that, thank you very much for the time, Fari. Really appreciate it. Love all the bright, shiny colors that you have on your
Thanks. Thanks
chart.
for having me.
And I appreciate it so much. I look forward to doing something with you soon. And
You
thank
got it.
you, everyone else, for coming. Talk to you later. Bye bye.
Thank you all, and good night.